Hey traders, and welcome to Day Trading with MPS. Unfortunately, I couldn't record the videos today, so I'm only recording the results of the trades that I have. And I will explain you how I found these trades in details. Okay, it all started from the New Zealand dollar. I only had two trades today, New Zealand dollar and pound dollar. And the first one was New Zealand dollar. And the first thing I was looking at is the ABCD correction move. Let me open my Excel spreadsheet. It is a CTS Excel spreadsheet. CTS is deciphered as combined technical scores. I simply calculate, answering this question yes or no, I calculate the total sum of points, and if this line says enough points to enter the trade, then I enter the trade. If it says not enough, then I don't enter. As you will see further, the questions are very different. I'm not only trading one patterns, I'm looking for other type of confirmation to analyze the market from different angles. Look at the market like different traders, and if I find some area where lots of things converge, trend lines, Fibonacci extensions, patterns, and so on, then this level is a high probability of trading. Okay, to identify first, I am identifying this zigzagging movement, which is called a downtrend, and here we violate a low, installing a lower low, and not only a lower low but also a lower close. We have a bunch of candles that print lower close below this low. That's why if I am to ask the question, trend, new structure high, new structure low, I am answering yes. Sorry, it is Russian. Yes, and this gives me 1 point, and the total score is 1. The next question is the structure, support and resistance. Does the pullback that I'm looking at ends at the previous structure, support and resistance? And as I told you in the previous videos, to identify powerful support and resistance trading, we are to look at big candles, wide expansion candles. So I want you to pay attention to this candle, to this candle, and to this candle. They are the biggest three on the chart, and you are to look what levels they cross. And the first, this one crosses this, so the level should be drawn between the high and the close of the candle. So this is the level between these two lines. The second one, this candle, it violates this. You can see how it spikes through that, the high and the close, so it is kind of zone. And the third one, we don't see what it violates, but potentially it violates something of this kind, like this and to this. So I am marking the lowest low and the lowest close, and this big black candle violates this low. If you want to check how these levels performed in the past, you can scroll the chart and you can see 1, 2, 3, and they act very well. In the past they acted very well. Okay, as we are talking about this pullback as our potential termination, we are not looking at something else. So the answer to the question, if we have a structure, yes, we have a structure level. According to our calculations, so this was a structure level. Yes. The next question, if we have a trend line. Yes, we had a trend line here, and I'm drawing trend line two ways. First, I can draw the trend line using highs like this, and the second way of drawing trend line is using closes like this. As I was looking at the structural level, I understood that drawing trend lines using closing prices, so this old school way of drawing trend line, fits this picture much better. So I drew it using closing prices. Then the question is, do we have round numbers? There are two round numbers, one in the bottom, 68.50, it is somewhere here, 48, 68.50, and another one is this, it is 69. Oh, it is 68.999, so 69. So it is this one, 68.50, 69, and our level is neither of them. That's why we don't have any round number. The next question is, do we have a harmonic measurement, one-to-one movement, ABCD movement, or whatever? This is what we call harmonic movement. And to measure a harmonic movement, I'm using parallel channels. It is very nice to use a parallel channels. Not only you see the price, but you also have a slope of time, and you understand how when it should terminate, not at which price, but also when. Okay, we have an ABCD. ABCD is a powerful thing, that's why it gives us 2. Then we should measure Fibonacci retracement, and there are a bunch of retracements here. If I measure it from here to here, yes, then I will see that we have a 786 and we have a 61A. Neither of these levels fits my scheme, yes, and moreover, if I will draw a pattern, I'm going to draw a harmonic pattern here as well, advanced formation, then this retracement will be incorporated into the pattern, so I will have the same scoring point doubled. So I'm not going to calculate this retracement this way, I'm going to calculate the retracement this way, and what I see is the perfectly lining up 61A retracement. So I simply add this horizontal line here as well, and I type yes to Fibonacci retracement. So you see, all these things are lining up perfectly within these levels. We have structure, we have 61A, we have ABCD, yes, and then we should measure an extension. Do we have an extension? If we measure from here to here, an extension, yes, 1414, also lining up perfectly, right within a matter of 5 pips, maybe 2 pips. And inversion, do we have any inversion? Nope, we don't have any inversion. So we have extension, but we don't have inversion. Extension, yes. Inversion, no. Advanced patterns, Gartleys, bats, ciphers, butterflies. So what do we have? We have a unified formation, unified Gartley formation. It is in the advanced pattern group here, custom. I'm drawing them using my manual method because I draw everything on my chart, and when I have lots of patterns drawn using automated tool, it is kind of messy. But when I have manual drawing tool enabled, it gives me more empty space. So the pattern is drawn this way, and you see, as I told you, the 786 of completion of this X to A. Here is the level, and you will see something here. Although the pattern is pointing higher, we should understand that all these levels are nothing but potential support and resistance. And what we know about support and resistance, they are never precise levels. And so I made a decision. If price reverses lower, then I enter lower. Okay, so I have a pattern, a potential pattern that can produce profits, yes, but instead of waiting and trading it conventional way, placing limit orders or wait for a completion, I entered a bit lower, anticipating that price will not complete the pattern and will start the movement earlier. and this is exactly what happened. Okay, I answer yes to this question. Now it is very interesting RSI studies. So RSI overbought, oversold. This is the simplest questions to answer. So if we look at here, at this very point, it was oversold 80.23. 80 is overbought, sorry. So it was okay. The next question, do we have a divergence? So what is a divergence? You see these two highs, and you see these two highs that coincide with the RSI, yes, high number 1 and high number 2. Basically what we have here is this high is moving to the upside and this high is moving horizontally, let's say not to the downside but horizontally. So this is what is called a divergence. So we will answer this question yes. Next one is the hidden divergence. Hidden divergence is a bit more complicated thing, and what you need to do to have a hidden divergence, you need to compare X point and the D point. So in the X point, yes, at the X point, you have a horizontal line, and in many cases, look at this. This one is, so the X point and the D point is much lower, so we have this slope, but here they are almost horizontal. In many cases it exceeds that level, and we have higher high while we have lower low. So this is what is called a hidden divergence. But today we didn't have any hidden divergences. Hidden divergence is a sign of continuation. Oh guys, sorry. I am to redraw the pattern from here to here, I suppose. Okay, and let me put this line and ABCD. Okay, and the last question is, do we have minor patterns? Hammers, piercing patterns, engulfings, shooting stars, twisted tops, twisted bottoms, minor double tops, minor head and shoulders, and whatever, 3-bar reversals, lower low, lower close. There are multiple things that we have. Okay, so what was my pattern here? I call it RSI pointing to the downside. This is the pattern that I use, and it is very powerful but very simple pattern. Okay, so what I want you to see is this. So you see RSI is moving to the upside from here. Here RSI is not overbought, that's why we don't even look at this level. So you can see RSI is 79, 98, 23. It's not overbought. But at this point it is overbought, it is 80.23. And we see that previous movement of the RSI is to the upside. It is pointing to the upside, and it means that the power of price is increasing. At this very candle it is increasing. But then on the next candle the power started to decrease. You see, it is pointing to the downside at this very candle. And once we have the stuff, I enter at market at this candle close, and you see I have this timer. It tells me how much time is left till candle close, and I close the candle. Okay, initially stop loss was set according to this unified Gartley settings. It is 130 in Fibonacci inversion. Yes, and then as price went to hit first the 382 level, it was moved to the D point here, yes, and then I closed the position. Basically I closed it here when it reversed, and if you will see, we had time already to finish my trading, and I'm not leaving positions overnight. That's why there were two reasons to close it, because it is time to stop trading, and the rejection candle that moves to the upside without hitting. Okay, don't wait until it hits stop loss, don't leave it overnight or whatever. So this was a result, and let me show these trades here today. So the first one is 1024. It was closed 1024. It was open at 10 New Zealand dollar. So this one is the first trade, and you see the arrows pointing from here to here. This is sell, 1.55 lots New Zealand dollar at 68.74.4, and this one is take profit. Okay, and the second part of the position was closed here. So you can see after a while it was closed at this candle. Okay, the second part of the position. This was New Zealand dollar trading for today. The next one is pound dollar trading, and let me show you how it was. So I first opened this one. Let me delete. The first thing that I noticed is that we have a kind of downtrend, just broke to the downside, and I found this major support level, something of this kind. We didn't have any of this price action because it was only morning. Right now it is evening, and we have that upside movement. But when I found that, we didn't have it, and I thought that it would be a nice trend continuation to the downside. Another reason was this double top, yes, and a pattern, a unified Gartley pattern, and let's calculate the scoring. So we just go to place that no. So do we have a trend? We have a trend, yes. So I answered that as yes. Do we have a structure? We have a structure, yes. So these were the major things you should pay attention to. Do we have a trend line? It is a bit tricky with trend lines. So if you draw it this way, you don't have it. If you draw it this way, it seems to me that you do have the trend line, but a bit higher. If you have it this way, it seemed to me that we have a trend line very much fitting, very nice fitting that price action. Okay, and if we draw it this way, it is looking as if we violated that trend line. Okay, I drew my trend line this way, and because of that, I saw that it should bounce at that trend line, and I answered yes. What we do when analyzing the market, we cannot stay objective, because we are trading our beliefs, and when we are looking at some trading opportunity, I already know that I'm going to enter here, and what I'm looking at is to give myself a proof that I need to enter. It sounds a bit strange, but I'm trying to find the evidence. I already know that I will enter this trade, but I need a proof. Okay, why I know that I will enter? I don't know why I know. Next thing that was there, round number, no, it was not. It was not the reason. 2850. 50 was here at this level. No, it was not the reason. What was the time for pound dollar? It was open at 10.15. So let's go to this 10.15. Yes, it was open at this very candle. This one that spiked through the trend line. Okay, no round numbers. ABCD. I measured the ABCD this way, and it looked like we have a nice ABCD confluence here, so you can see it. ABCD confluence here. Then I looked at a RSI overbought. Sorry, I need to answer yes to ABCD. No to Fibonacci retracement, Fibonacci extension, potential Fibonacci extension. We had 1414, something of this kind. As for Fibonacci inversion, 161A, so we have both 1414 and 161A, so we answer yes and yes. Then we go to have a pattern, a unified Gartley pattern, and this is the situation when if we look at the New Zealand dollar, in this situation price didn't hit the zone between invalidation and completion. Yes, but in this situation it was different. Price exceeded the zone between invalidation and completion, like this. You see? Okay, so after that we had a pattern. I type yes. Then we had RSI overbought, we just saw it, yes. Divergence, do we have a divergence here? Obviously we had a hidden divergence because at X point, and look at what we had here. We had RSI overbought. Price was showing lower lows, yes, from here to here, and RSI was showing high highs. This was a divergence. That's why I answered yes to this question. But divergence is not a guarantee that you will have something. Okay, and minor patterns. I'm not using very many patterns. What I use is RSI starting to point to the downside. That's why. Okay, I didn't enter here, I suppose, but what I did, I entered a bit higher. Oh, what happened? This was a signal because RSI started to point to the downside. This was a signal, but I placed a limit order higher and I entered higher. I suppose it was this way. What we will do, we'll just stretch this trade, and you will see, yes, it was triggered right after the candle close, next candle open. The first trade and the second, because I opened two trades to close. First take profit and second take profit. Okay, they were immediately blown off, hitting this stop loss. You see, immediately. But then price rejected, and I did the re-evaluation of my analysis. Yes, so the unified Gartley didn't work. But we hit 113 extension, which is also a powerful level, Fibonacci, and then I started recalculating. So what if we have a structure not to the downside, but what if we have it a bit higher? We didn't violate that structure. What if the trend line was not drawn correct way? Maybe it should be drawn this way. Yes. And then I did the re-evaluation, and I found some evidence that I should enter a bit higher with this very situation, because basically nothing happened, especially if you look at the higher time frame. Nothing happened. It just exceeded the exact level, hitting my stop loss. It just exceeded that. Nothing bad happened. but the overall idea still stays okay. Overall idea to sell pound dollar still stays okay. So what I did, I sold it once again, and the first trade was here, 2.55 lot size. It was here, let me draw it, starting from the open of this candle and hitting this 382, starting from the open and hitting the 382, and the stop loss for that was 180 above the most recent high. And because we had a smaller distance from entry to stop loss, I could open a larger position size. So if you compare the first position size, it was 1.71, and second position size, second trade, yes, was 2.51. So if I have lost 600, roughly 600 here, then I generated 600 only at the first target, as my first target. And the second trade for that was this. And what I want you to pay attention to is this situation. When I do break even my trade, I'm not placing the stop loss. Imagine this is the stop loss to the entry. I'm not placing it to the entry because it makes no structural reason to place it to the entry. Instead, I move it to place at the extreme reversal what I had. So if I had the D point reversing here, I would simply place my stop loss here. And when price, after hitting my first target, went higher, those who did the break even to the entry, to exact entry, they had 0 of for their second part, and I instead had a second take profit, which was pretty large, of 1,193. Okay, so the total result for today is the 1,079, which is pretty much pretty good for me, not a bad day, especially if you'll keep in mind that in the beginning of the day I just lost 1.2k, 2 trades, minus 600, minus 600. I just lost. The beginning of the day was not very good, but then everything leveled as it should be. Okay guys, so all these patterns that I demonstrated in this video were drawn with the MPS pattern recognition software. You can use manual, you can use, oh by the way, nice pattern that is said now, automatic algorithms. You can switch between different type of patterns and blah 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 blah. All the trades were set by the pattern trade assistant. You set the targets as 382 and 618. You set the type of your trade position size calculated, and you set the risk value, how much you're going to risk. Then you target adjustment, break even to the D point, or whatever. You choose those multiple options, and then they are traded the way you have chosen. It is pattern trade assistant who does the break even of the trade, who moves the stop loss. And even if I am away, if I'm not in front of my screens and the first half of my position is closed, pattern trade assistant recognizes this situation and it moves the stop loss of the remaining half to break even or to the D point according to what you have set in settings. Okay, you will find the links to the software and to my website in description, and hit like if you find this video useful. Until then, good luck and good trading. Hope to see you soon.